I'm Alex Myler.
I'm Emma Johnson.
We're going to give you a short overview of how our market is doing in Bonneville County. If you have a county that you would like us to spotlight next, please let us know, whether that's in the comments or send us a message, because I'm sure that you're our friend who's watching this.
Yes.
No, my fans and wherever, please let me know.
Yes.
But we're using a system called Area Pro, just a very shameless plug, super awesome product. Emma and I were chatting a little bit before, but as we mentioned in one of our previous episodes, Idaho is a non-disclosure state. So a lot of the data that our consumers are reading off of Zillow, Redfin, Realtor.com, anything that's giving you an aggregate or a
we call them AVMs, automatic value models.
Yes, anything that's going to give you like an automated reading of your property value that is not tied to an actual real estate office doesn't have a lot of accuracy. It's actually sometimes, what would you say, 20 to 50% off?
You know, it depends on the market, but a lot. So like Zillow, or honestly even some of the systems that we use, anything that's automated, there's going to be a pretty significant margin of error that's possible there. So because they'll pull from like properties that are active on the market and tax records, so like what the assessor says, which I mean, we know in Idaho, property taxes is a huge button item for a lot of people on there.
Yeah, and why people want to live here.
Yes. So where they're basing it off of like tax valuations, which typically isn't an accurate representation of what your home can fetch on the open market. And then what they have listed, like we could be looking at a neighborhood full of townhomes. You can list your home for whatever you want. But if I list my townhome for $1 million and seller Alex next door wants to list hers, her automated value measure, automated value model, your AVM, it's going to skew that because it's going to be looking at mine and be like, oh, well, these are comparable and this is listed on the market. So they can sometimes not be accurate. We've also seen them come through and be like, oh, yeah, like your automated value from a named site. I don't know if we can say the Z word or not.
From Zella.
Isn't necessarily, like, it might not be too far off. So a lot of it's just going to depend on the market you're in. But the great thing about Area Pro is it's basically a data analysis software. So any agents, if you want to see like a quick demo or a peek, shoot us a DM and we can connect you with our team, or we can kind of give you a little look behind the curtain at what the system looks like and the information available there. But it is pulling the information directly from the MLS. So when a home sells, agents have to report what the home sold for, if there were any like concessions or like the seller paying buyer closing costs, they have to report those into the MLS. And that is where Area Pro is going to pull that data. So they actually do have accurate sold data and not just relying on if the agent did report it to this public software or did the county update things. Sometimes they do, sometimes they don't. So just gives us a really, really accurate model of what's on the market, what things have been selling for, gives us an idea of like rooms for negotiation as well. So like buyers, if your agents don't have access to tools like this, definitely ask for that information, because you'll be able to go in if you're looking at a house that's been on the market for just a couple of days and there's been a lot of showings and it's a really competitive one. We can pull the data through Area Pro that's going to tell us an idea on how that market's performing and how competitive our buyers need to be going into these certain properties that they might be interested in putting offers in. So really, really versatile tool.
It gives you a lot of strategy. It gives you just a little bit of savviness in the market. So we've just pulled a few statistics just based off of Bonneville County. One of the stats, just to first start off, is current market dynamics. And this is just on Bonneville County. So it shows a pending ratio of 40%. So to me, that kind of feels a moderate level of being balanced, but I think on paper it looks one way, but it feels a little different, if that makes sense. Like, what did you think about that?
Just from looking at how the metrics have changed and just like how the buyers with the agents on our team have reacted to different markets, I mean, I like that, but that like 30 to low fit. So what that number means and where that calculation is coming from is in our MLS, everything that's considered active is going to be listings that are actively soliciting for buyers. So they are open on the market, they're ready to show, and it does include homes that are under contract. So what that ratio is, out of all of the homes that are currently listed, so everything that isn't closed or unavailable, what percentage of those is currently under contract? So with that, what was it, 48?
40.
With that 40 percentage, so there's 100 homes that are in that active category. 40 of those are considered pending, so there's 60 that are active, is where that ratio is coming from. I like from a seller's perspective, we love to see that, and really anything above 30, we want to see that movement in the market. We want to know that there are active buyers that are going through, they're looking at properties, they're getting them under contract, they're scooping them up. But also from a buyer's perspective, it's still a sweet spot because there's still a lot to choose from. Sometimes when we see that inventory dip, which for a lot of markets is usually the winter time or the off season, we tend to stay pretty steady in East Idaho, but there is just a little bit of that dip in inventory as people are coming off. You're losing your options. So you go from maybe having 10 to 15 homes that fit your criteria to just having a couple, and sometimes that home search can take a little bit longer. So it's a really good sweet spot. Sellers have confidence that they know that there's going to be buyers out there. It gives you a better chance to find it. Obviously, we love, from a listing perspective, we want more competitive markets, but we also work with buyers, and we also have those clients in our portal that don't necessarily want to be facing multiple offer situations.
Yeah.
So I actually kind of prefer that. I don't want to say more relaxed market, but that's kind of the vibe of.
I think the word balance just feels really good for them. There has to be supply and demand. All of those things are just they really envision them as scales in a way of certain things tip, certain things, and right now we're evening out, so it just doesn't feel so rushed. People have, like you said, options, and our sellers have options, our buyers have options. Anyways, it's a good time to create win-win scenarios. That's what I think right now is. And this actually leads really well into our next stat, which is our average days on market. So right now, the average days on market have gone up a little bit. So it looks like in Bonneville County, this is for all price points combined. So this is from 0 to $1 or $2 million, which I think is where we tap out usually, right?
Because there's just that million plus.
I was curious because
we're looking at residential properties on this, so it's not like we're including commercial land that's listed for $8 million.
Yeah,
or
no
whatever.
farms or anything. This is just residential sales from 0 to 1 million plus, maybe 1.5, maybe a little bit above. But it says that our average days on market is 85 days. Now, excuse me, the higher price points will naturally have a longer period just because there's just more involved. So I shouldn't even say that. There's not always more involved, but that's just the nature of it seems like.
The luxury markets, it's its own beast. So, and because I'm pretty sure on the summary it'll have that breakdown that we talked about before. Can you share the days on market for that luxury index for that million plus versus our days on market right now for the $0 to $500,000 home?
So 0 to 500K is 72 days.
Okay.
500 to 1 million is 98 days.
Okay. So a little bit,
and then 1 million
a bit of a
plus,
jump. That's a whole month that jumps on there.
And then 1 million plus is 149 days.
Oof.
And days on market can kind of be tricky. We've talked about that a lot in our team meetings lately. It's when you are getting, as a buyer, or maybe even as a seller, when you're being presented the days on market, don't use that as a crutch. That should be.
Yeah, that's not a checkpoint.
Yeah, it's not a this is how long it's gonna take. That is a combination of everything that has been closing up until this time, that based off of the days on market that they've sat, and it's bringing it to us now. So you want to keep that in mind, because an escrow typically takes 30 to 45 days.
Yeah.
Most of the time 30, unless there's interesting financing or just some additional needs. But if you are a buyer and you're wanting to get ready for the spring market, I mean, spring's like knocking on the door. Like,
yes.
like Jack Frost is leaving, hopefully. And Persephone's gonna come. No, just kidding, I don't know. I'm not trying to get too creative. But spring is coming, and these days on market will actually get a little less, I think, as the spring market comes, because we're going to see more competitiveness in the more buyers in the just naturally. But our seasonality is actually very comparable all year, but competition can feel very different throughout the year. So with that, how do you feel about, like, what else do you think about days on market right now? What else should people be considering? Or
I mean, my first thought that comes through that, because we're pretty listing heavy right now. We do have a lot of homes that are up on the market, is that kind of the narrative that paints from the seller's perspective, because that's a long time to be on market for 72 days. I don't know. I'm just like there's a certain anxiety that comes with that as well, of not knowing when you're going to get that showing request. How clean does the house need to be? And like, can I let the dog sit on the couch, or is it going to make it smell for the next showing? Or like,
what, like, does perception say, because you know, where we've been on market for 30 days, like what like, I mean, everybody has their own perception when they go to a property, and ultimately that's on them. Like, you can't control what someone else is going to perceive too much, right, in the end of it. But I do think that these are encouraging if you're somebody who you're like, I don't know where to start, because real estate is not meant to sweep you up with it. Like, this is, you will make a conscious effort with every piece of it. And so these metrics just give you an expectation. Like, I actually shared this quote today, but if you, what's the quote exactly? Like, luck favors the prepared. Like, you don't just find, like, sometimes people stumble into their perfect home, but I think more often it's people who are opening themselves up to the possibility and doing the work, seeing what's around them, being in close proximity with people like agents or like mentors or lenders that can help you. But if you don't know the rules of the game, I don't know how you think you can win the game. And this is the game of buying a home or selling a home, if that makes sense. There is some recent trends that it shares. Okay, so I'm gonna read this verbatim.
Perfect.
Over the last 3 months, the average closed sales per month is slightly lower than the 6-month average, reflecting seasonal trends or a slight cooling in the market. So we've already been aware that it's winter. We have our perception of Idaho Falls when it becomes winter is we all go in our igloos and we hide out until the sun comes.
There's a certain level of hibernation that I think a lot of us.
It's been like -3 for the last like 2 weeks. It's been awful. But so there's actually some cooling happening in this area. But I do think that not having to make rushed and not as intentional decisions is like it's a good thing. I don't
not to cloud your expectations for any people whose homes are on the market or who are preparing to list it. And I think we've mentioned it before, but what we lose in inventory and we lose in the amount of active buyers, we usually make up for in motivation.
Absolutely.
Yes, that they're people who either need to come through or are just choosing to take advantage of a slower market on here, that you're not quite as rushed to make decisions as sometimes our market does prevail through the summer and the spring months when we have more buyers. But I mean, I guess just another factor of going in, of just trying to take the data from the past to try and tweak your decisions now and your expectation for what you want to be. I know you had mentioned, and I don't know how much information you have on it, but there has been a lot of like buzz and anticipation of, like, we've heard a ton of people of like, let's wait until after the election, let's wait until spring, let's wait for interest rates to drop. I know one of our lending partners through Envoy Mortgage, Brady's been sending us just some things here and there. Like, rates have held steady. We've seen a little bit of movement here and there, and like, for your perfect ideal buyer, you have a great credit score, you're hitting that 20% down payment, like, rates are fairly favorable right now. We're not really seeing like this 7-8% that was kind of doom and gloomy from the last couple of years. So we're seeing some positive trends there, but there's also been just a lot of hesitation with a lot of potential changes within our economy and those kinds of things. I know you had a little bit of, I mean, you're a little bit better versed in some of those things right now than I am.
There was one thing that I saw that I was just like, I'm gonna even Google it to make sure. But I've seen a lot of our mortgage people just being like, hey, your FHA loans are fine right now. Like, all these government-backed things are fine, but there are some things that maybe you just want to check in on. Like, I'm not necessarily the knowledge of all, but things can affect you on like a big scale with what's happening with the government right now. And this is somebody who is not a mortgage person saying this. I don't think rates are gonna ever go down super, super low again. Like, I mean, I would be so surprised if in our lifetime we see a 2%.
No, I think that's fair.
Like,
or
I should say,
it did a lot of crazy things to our economy and to the real estate market. That like 2% was a crazy beast.
2% was a crazy time. That's when I bought my first house. It was I bought like a 2 point something, and I mean, it was still a lot of money. Like, don't get me wrong, for me, I was freaking out. But I do think that there are some things that people wait on. But you can't always just wait for the exact perfect right time. Like, I love the quote that's like, the right time to buy a house was the same time it was to plant a tree 10 years ago. Like, if you want, like, so we can get more into that spiel later, but I do think that there's a lot of movement happening in actions that people have been waiting on, and if you're not cluing into them, and if you're not watching what's happening on a grand scale, that's eventually going to help or impact our local communities. And I'm not saying in a negative or a positive way, just the impacts will happen, changes happen. Like, we are a society that's growing, so it's an opportunity to find people and mentors and your person who can lead you through those times of uncertainty.
Well, and from the outside looking in, I mean, everybody wants a lower interest rate on it. Like, mortgages are such a crazy, mind-boggling amount of money for most people. That 1% change can be like it can be a huge game changer for you, for your budget, for your your pre-qualification of how much money you can actually take out. So, I mean, I think where a lot of people are coming from when we sit there and we go, I can't make a move until interest rates come down. That it is a very individualized decision, and to a certain extent it needs to be, because the only right time to buy a house is when
you're ready,
when you're ready financially, when you're at a point in your life to be physically moving, to change schools if you have children. Like, there's so much that goes into it, but when you're ready is when you need to be making that move. That was very redundant.
No, I give it.
And we probably will edit that out.
We beat that dead horse.
Yes, we did. The reality of it, though, just like to frame your expectation, if you can't afford to buy a house until interest rates come down, or until you can increase your income, or like whatever that metric is, like, still have those conversations. Like, we can connect you with a lender, because if we ever see rates of 2-3% again, it very likely will be the same madness that we saw before. That
I'll be able to
homes
retire.
were moving so quickly. There are like multiple offer situations, buying houses sight unseen.
Every day you're just sweating through your shirt. You're stressed out.
Yes, that there's so many people that are waiting for those rates to drop before they can enter the buying pool. So, I mean, we've even just chatted with a handful of people in the industry out here of the amount of buyers that we've got sitting on the fence who just need the rates to drop like a percentage point. That even like if we even see like 4s, 5s again, that buyer pool is going to increase, and we're going to have the same issues that we had before. And I feel like that's a pretty fair prediction.
Oh, absolutely.
That we've had a lot of other professionals affirm as well, that if we see that, where we should expect homes to not sit on the market very long. Buyers may lose some of the power that they have right now to negotiate things like having seller paid closing costs, or wider inspection periods. Like, I mean, even like having a home to sell, having a contingent offer come through. We're able to navigate those situations enough right now because we're in a pretty decent balanced market. Sellers have some power, buyers have some power coming to the table, and right now feels like a really healthy dynamic if you're in the position to be able to step into that. But I think just preparing yourself for that expectation, that it isn't just this, I'll be able to afford my mortgage and then I'll get a house. So just keeping your options open with and chat with lenders too. There's a lot of lenders, both like local mortgage companies, credit unions, that have options available to you. And if you come in knowing that you can only afford the house if you can get a 5.5 or a 6.5% interest rate, our basis is kind of there right now, that if you can get a rate buy down or those kinds of things negotiated into your offer, and that just all comes down to having a good professional on your side, both as an agent and as a lender, so that they're able to advise you on those situations and to be able to kind of pencil out what the reality of each home that you would want to put an offer in is going to sit for you. But that was a long-winded way of saying find a way to be ready now.
Yeah.
If it's what you want,
Get it.
Yeah.
We say but I mean, when I bought my first house, it was so overwhelming, and I bawled my whole first offer. Like, I mean, hiccup, snot on my offer. Like, it was disgusting. I'm sitting in the Starbucks of the Treasure Island, and just I'm like dripping all over my offer, and I'm signing it, and I'm like, I've never seen this much money in my life. I bought a house for $130,000 in Las Vegas. Like,
A different time
to be alive, right? But
that is going to be our generation's version of like, I used to go to the movie theater for a quarter. Like, I bought my first house for $130,000.
Or like when you go to
nice,
Rexburg and they're like, everything used to be a field. And I'm like, that's what I'm gonna be when I go to Vegas. But like, that used to be my house. Now it's like a coliseum or something. Who knows? But I mean, it's so personalized. Shelter is like a basic human need, right? So I think that me and Emma have been in the industry long enough that we can have like some very high emotional conversations with a buyer with a little bit of retrospect of what we've seen, so we can kind of keep perspectives in line. But honestly, we were talking about it today, like it's a good time to be in real estate.
It is,
like it feels like the market is like balanced. It feels like everybody is owning their crafts. A lot of really incredible skills came out in the last few years, just because like we had a very volatile market. You had to pivot so fast in order to stay ahead of what was happening and what was coming for us and what was changing in our world. I mean, the last 4 years have been incredibly volatile. Yeah. And I think in the economy and a lot of people's like personal life, but it seems like, I don't want to jinx it, the next episode we'll be like, everything's on fire. Just kidding, sorry LA. But I do think that we're gonna see and continue to see more opportunity happening. I think it's just, if you're open to the opportunity, that's where it finds you. I think that it's still a good time to just put yourself out there, look at some resources. Like we talked about in our last one, there's home buyer classes out right now. There's also an awesome book, quick plug, Your First Home by Gary Keller and Jay Papasan. Yes. Fantastic book. And it just talks about like what it takes to get your head around getting your first house. And when it's your property, it does feel a little different. I hear that's what people say about kids as well. But I do think that
is
when
correct, actually.
when it's your property, you have to change the filters. You have to do all the pieces. Like when I bought my first house, this is my own little shame. When I bought my first house, so I lived in Vegas, my mother-in-law came over, and we lived there for like 6 months now. And I have a bunch of dogs. I'm not going to tell you how many, but I have a bunch of dogs.
A lot.
I have a lot.
It's a big number.
I have a good amount of dogs. There's 47 dogs in my house. Just kidding.
Some days it feels like it.
Yeah. But I remember she's upstairs, and I had this like 1,200 square foot house that was kind of stacked on top of itself. And she's in our upstairs, which is where all the bedrooms were, and that's where our furnace filter was like up there, because our furnace was in our attic, because it's Vegas, no basements, anything like that, it's up in the attic. And she's like, why is there so much hair on this filter? And I'm like, I have a gazillion dogs, what do you mean? And she's like, when's the last time you changed your filter? And I was like, oh, you got to change that? That's crazy. And so she went and bought us a bunch of she went to Home Depot and bought me a bunch of filters.
Oh my word. That's a
she
great
was like,
closing
you're gonna
gift
burn
idea.
your house. Yeah, it's a good closing gift idea. But like, I had never owned a house. I had never, and I mean, that was not my childhood. It was I learned different maintenance of a home than that. I didn't learn how to do the handyman stuff. So then, neither did my husband, funny enough, and we're just like, oh, you're crazy. But like, what if my house would have just lit on fire? you know, or like my dryer just poof, like
Yeah.
there's so many things, like making sure that your hose is disconnected in the wintertime, making sure that
Yes.
like you unplug your washer before you leave on vacation.
Oh my word.
Like
Yeah.
things like that. Like
Mhm.
there's just, when it's your home, it is a little bit more of a learning curve, but you
It
do
is.
get your own piece.
You know. Cool. That's
Cool.
it. The end.
The end. The fin.
Nothing.
The bow. We're done.
Yes.
That was good. I think that was
Yeah. We did fine.
good. Mhm.
Thanks for sticking out with us.
Yes. You should definitely you should cut that part. Just, I think
Yeah.
that was good.
I think that's good. Or it wasn't, and we're about to find out.
And well,
Who knows?
That's okay.